You're waiting for the property market to crash before you buy, you could just be looking at the wrong data. Because Rightmove have just released their latest house price index, and August saw the biggest fall in prices since 2018. There's more property on the market than we've seen in the last 12 years, and they've just downgraded their forecast for the rest of 2026. Now that sounds pretty bad, doesn't it? But here's the bit the national headlines probably won't tell you. Up here in the northeast, prices actually went up, and we were actually the only region in England to record an increase this month. So, is the property market falling? Or are we actually looking at two completely different property markets? One for the expensive areas and one for the more affordable. Now this Rightmove report is a perfect example of what I keep saying. There's no such thing as one property market in the UK. Now nationally, asking prices fell by around 2%, and that's roughly 7% off the average asking price. And the average asking price across Great Britain is now currently £365,000. Now these are asking prices. They are not completed sales prices, so just understand the difference there. Now, what this doesn't mean is it doesn't mean everybody's house has suddenly lost 2% in value. But what it does tell us is sellers are being a lot more realistic in these summer months. And I think, to be fair, there's probably a pretty obvious reason for that. There's more property available now for buyers than there has been in the last 12 years. So buyers have options. And if there's an oversupply, you need to correct those asking prices to get some interest. The buyers can negotiate. And if the property is overpriced, it's just going to sit there on the market and it's not going to go anywhere. Now, on the other hand, if you're a seller, that might not sound like great news. But if you're an investor looking to buy, I actually think that creates the perfect opportunity, because more stock, more realistic sellers, potentially more motivated sellers mean more negotiating power. Let's get that Muller. Now, because of that, that can create some wonderful opportunities to buy. We're seeing landlords exiting portfolios, where seeing people move up and down the housing chain. And this is where the northeast starts to get interesting, because while the national market fell this month, northeast asking prices actually went up by 0.6%, and that up by around 1.7% year on year. Now you compare that to London, where asking prices are already down by 3% year on year. So completely different markets, the north to the south. And that's exactly what I keep telling my investors. Don't just read the national property headlines. Don't just read what you're seeing in the media. Look at the data, because what's happening in London isn't happening in the northeast. What's happening in the southeast isn't necessarily happening in Sunderland or Durham or Northumberland or Tyneside for that matter. So property is incredibly local, and the other thing that really stands out for us is affordability. The average asking price still in the northeast is around £198,000. Nationally, it's closer to £365,000. So to me, the affordability gap is really there. Now, I think with affordability being one of the biggest reasons we see people looking at the northeast, the rental returns versus the purchase prices are still very competitive. But quite simply, your money goes further. And what might buy you one property in the south might get you two or three in the northeast, and that can actually spread your risk. Now, average property in the northeast is currently taking 52 days to secure a buyer. Nationally, that is 63 days. And in London, it's 73. So there's a real big difference in the data that we're seeing here when you compare the national to the local to the south picture. And I think what it shows is the northeast has some real good resilience right now. Now, I'm not going to lie and tell you everything's booming, because it's not. I think the more affordable, better priced areas are. And those that aren't affordable, like anywhere, I think they're struggling a little bit as well, because borrowing costs are still a massive consideration. And the average 2-year fixed mortgage is sitting at around 5%. So I think this is where the property market's probably changed for investors, because when the cost of borrowing was really cheap with interest rates, people could get away with more or less buying anything. It would stack up because of the cheap debt. You'd rent it out, you hold it, and you rely on the market going up. But that is not the market we're in anymore. Today, the deal actually has to work. You need to buy at the right price. You need to understand the realistic rent. You need to understand the yield, the refurbishment costs, and importantly right now, you need to understand the finance side of things. And ideally, you want to be buying a property where you can add some sort of value, either through a refurbishment or through nearby regeneration schemes, which is going to uplift your value. Because hoping the market bails you out isn't an actual investment strategy. And Rightmove themselves are actually being more cautious with their forecast for the rest of the year. The previously expected asking prices to increase by around 2% during 2026. And they've now dropped that forecast and downgraded it. And they actually think the national market could drop by around 2%. But remember, that is a national figure. And this is probably the biggest thing I want you to take away from this video. Stop making property decisions based on what you're reading in the news. You need to understand the market you're thinking about investing or actually investing in. You need to know what properties are actually selling for. You need to know what the rental demand is. You need to know what rents are actually being achieved. And you need to understand how quickly they're actually moving. Where's this demand coming from? And most importantly, does the deal stack up today with the interest rates at the levels they are? Now, because my view on the market at the minute is actually pretty simple, I don't think this report is telling us that there's, a big property crash happening or about to happen, but I think we are in a much more price sensitive market right now. If you're overpriced, you're not selling. Now, sellers have to be realistic. Buyers have a bit more choice. Within that, there's negotiating power, but investors need to be a lot more selective than what they have been in previous years. Because personally, I actually think there's some fantastic opportunities around through the auctions, through landlords exiting portfolios, like I say, through people downsizing. But remember, when everything's flying and properties are selling immediately, everybody thinks properties are only going to go up. But finding genuine value then actually becomes difficult. A slower market actually gives you more choice, it gives you more time, and it gives you more negotiating power. And as a result of that, I think that means you get better opportunities. And that's why you shouldn't aim to time the market. You should always be looking to buy. But that doesn't mean every property is suddenly a good deal. Actually, far from it. Like I say, you need to understand things like the areas, the numbers. You need to have the right strategy in place. And that probably brings us on to the most important question, to be honest. Are you actually ready to invest in property? Are you actually ready to invest in property? Because buying a property isn't just the first step. You need to understand where you currently are. You need to understand how much capital you've got available. What's your borrowing position? What are you actually trying to achieve? Are you hoping for cash flow? Are you looking for capital growth? Are you hoping to have a bit of both? Is it a portfolio you're looking for, just in one single property? Is the aim to replace your income eventually? And how involved do you actually want to be? Do you want to do everything yourself? Would you like some support? Or do you want someone else finding and managing these opportunities for you? Because the right strategy for one investor can be completely wrong for another. So I've created a free property investment readiness quiz. It takes literally a couple of minutes. You answer a few simple questions about where you are now, what you're trying to achieve, and your current position. And at the end, after 3 or 4 minutes, you'll have a much clearer picture of how ready you actually are and what your next step should potentially look like. So if you're watching this and you're thinking, I'd love to invest in property, but I've got no idea where to start or what to do next, do not start scrolling through Rightmove looking for random properties, because you'll be there all day. Start by understanding your own position and click the link below. That's going to take you to my readiness quiz, and you're going to be able to find out what your next move is specifically for you. Because the opportunities are there, but the important bit is making sure you're taking advantage of them.